The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more. The Luna Foundation Guard is said to be preparing to buy $3 billion worth of Bitcoin to introduce a new BTC-backed reserve UST stablecoin. Terraform Labs co-founder Terraform Labs co-founder Do Kwon saying the eventual goal is to buy $10 billion worth in BTCs. Joining us now to discuss is Darren Lim, research analyst at blockchain analytics platform Nansen. Hi, Darren. Thanks for joining us. So taking a look at EtherScan data, it's showing that there have been 4 $125 million transfers of Tether that was moved out of a Gnosis Safe address thought to be associated with Luna into what appears to be a Binance address. So can you walk us through what's going on here?
Right. So I think what's happening, at least based on data, right, is that all of the Gnosis safes, as well as the signers of the Gnosis safes, all of them with Ethereum by the wormhole deployer. So obviously, then we know that this wallet is connected to the wormhole and likely to the LFG or Luna Guard Foundation. So I think what's happening now is that Do Kwon, the founder of Luna or the founder of Terra rather, is obviously pretty I would say going ahead with what he said he plans to do, which is to sort of increase the reserves or stack the reserves of the LFG with some BTC. So I think what's probably is that some more stable coins are going to be transferred to centralized exchanges, and then the purchases is going to be made, or it could already have been made, over the past few days. As you mentioned, a lot of the money has been transferred.
And why do you think that this is necessary?
Yeah.
Do you think it will make Terra Luna more stable?
Why do I think this? Do I think this will make Terra Luna more stable? I think a bit, right, which is and then make the Luna more stable. But I think what's more interesting is also why he's so public with this. So I think he tweeted pretty early on interested to do this and interested to stack the reserves with BTC. And we can see, he has had quite some waves on Twitter. So I'll be interested to see how, to see what sort of effect this has on the market. Not just it, but maybe the rest of this week, and even up to the end of the year.
So Darren, I have to ask you this because this is a little bit, it seems like there are people within the Luna community who either are mischaracterizing it or not understanding it. And that is this. Some people are, Darren, are you there? It seems he might have frozen. Oh, he's there. Great. So it seems that, are these Bitcoin actually backing UST? Or, my understanding is this, is that if the price goes down below 98 cents, if the price of the UST goes below 98 cents, people can redeem that essentially for Bitcoin, 98 cents worth of Bitcoin. The idea being that that would essentially be the floor, if you will, provided that they don't use up all $3 billion worth of Bitcoin. The idea being that that they're not going to deplete that reserve. Nonetheless, there are people within within that whole Luna community saying, well, it's not really backing UST. It's just it's a separate fund, and it works differently than if it backed it. It's a separate idea. Can you elaborate on that?
Right. I would say that I'm probably not well versed enough to cover it. But what I know is that USD and Luna they work together like a synergy model, right? And then you can burn Luna to mint more UST, and then you can vice versa. So I would say I'm not 100% sure of how this whole reserve backing is going to work specifically for UST and BTC. What's the relationship? But I believe the LFG, right, the Luna Foundation Guard, obviously has a very strong vested interest to make sure that UST is backed, and then to ensure that UST runs really well. So that's all aside. That's what I would say about the topic. So I'm not 100% sure on whether I can comment, on the asset relationship. Yeah.
Yeah, and I think the people in the LFG are themselves. There are people in the LFG who are characterizing as if it seems as if it is a backing of UST. But if that is the case, and you have a volatile asset in the asset base that is backing the stablecoin, and that stablecoin is then used to buy volatile assets such as Bitcoin itself, almost sounds like we're hypothecating internally. Is this essentially, is this a sound money idea in the sense that, okay, if the price of Bitcoin, let's say there's a sell-off, whatever reason, something happens and the price of Bitcoin falls dramatically quickly to, say, $27,000 per Bitcoin, simultaneously demand for UST collapses. What happens then? I mean, does the whole system collapse with that?
I think that would depend, on how the UST and how the reserve sort of worked with it, which is related to the previous question that we touched on. But what I would say is probably there is a relationship and there is some sort of backing between, obviously UST as a stablecoin and then, the reserves. But I think this would probably link to, the final details, right? Like the fine print. So whether there's a sort of a ratio in place or whether there's a sort of, some sort of buybacks or whatever that would initiate when something happens. So I think we would really have to dive deep into the fine print before we can, or rather really comment on this whole situation. Yeah.
Okay. Well, you've also been tracking donations to Ukraine. We have a chart on ETH transfers to Ukraine. Perhaps you could tell us a bit about what you've been seeing so far.
Yeah. So, I mean, first off, right, if you look at this, you can tell me when did the end, when, which is obviously, I would say between the 1st to 3rd of March, right? So obviously that sparked a huge amount of donations. But I think something that really stood out to me was that even though the amount of USD value is increasing, right, as you can see right after the tweet, the number of transfers, right, increased even more. So obviously that's because people wanted to get an airdrop, which was supposed to happen, but did not happen in the end, of course. People wanted to get an airdrop. So what the data tells me is that there were a lot of much smaller transfers after the airdrop tweet occurred, meaning that most likely people wanted to cyber it. So instead of, let's say, I want to donate $1,000 to Ukraine, right? What I'll do is I'll split my $1,000 into batches of 100, into 10 different wallets, and each one of them donate the $100 to Ukraine in order to maximize my chances of getting the airdrop. So I think this is sort of the meta now, right? Whereby if people are suspecting there's going to be an airdrop, or if an airdrop is supposedly confirmed, then that's what's going to happen, where people will try to spread out their money or spread out their wallets to ensure that they get the maximum potential or the maximum return from that airdrop.